welcome back to the Junius Malpe channel. Let's take a fast-paced look at some of the headlines. We'll try to wrap this video up quick. Thanks for being here and joining the alternative news conversation. I don't want to use the cliche, but I'm going to. This is going to be kind of a, quote, gut check. You know, a lot of us, a lot of you guys, myself, other friends of mine that purchase gold and silver as a form of a investment vehicle or savings avenue. There are times, and many of you will relate to this, over the course of the last 2 decades or so, where investing in precious metals, or saving in precious metals, parking your wealth in precious metals, using them as a hedge or what have you, can be pretty stressful, especially with the amount of manipulation, as we have seen in the global markets. You know, it's no secret anymore that there is manipulation taking place in the bullion markets. Headlines were pouring out just a matter of weeks ago, shedding some light on these very issues. However, there are natural occurrences and events which cause these metals to fluctuate as well, and things that are far beyond our control. I mean, economics is that. It's just things that are beyond our control. That's why I like to use the analogy of the casino for the stock market, Wall Street, because there's so many variables and it's so much like betting. Pardon my nasally tone, I do have a kind of a sinus congestion right now. But let's look at some of the reasons that the metals are behaving the way they are. I think a lot of you already know where we're going to go with that. But also let's look at this from another angle, as we like to do here, and take a moment to perhaps embrace an opportunity. And I'll explain what I mean by that in a moment. But if you look at headlines, you know, gold's at 2014 low. We've got platinum at a 5.5-year low. We see possible rate hikes. You know, the Fed's meeting today. Still no news on that. We see other people predicting gold to go lower. We see people talking about it maintaining basically an even plateau for the remainder of the year in this range, perhaps even $20 lower, like $11.30 range. We're seeing, you know, things in the stock market as far as volatility. You know, there's been some triple-figure drops and rises on both the Dow and the NASDAQ, just some fluctuations. There's discussion about bailouts for student loans, as you can see in the headlines here. Crude oil's gotten the tar beat out of it, quite literally. As you can see, it's been clubbed like a baby seal down to the $40 a barrel range, and there's predictions that oil's going to go lower. Today, gold's eyeing the Fed. Platinum's hitting 5.5-year lows. Again, more headlines. Gold bullion drops as the dollar and T-bond yields fall even. Again, the dollar, we're going to get to that, so just pause for a moment. U.S. dollar takes gold and ETFs for a ride. Yeah, the dollar. Again, you're going to see a lot of references to the U.S. dollar. And the whole world, believe me, is looking at the U.S. dollar. You know how I feel about the U.S. dollar. I think a lot of you guys share those same feelings and opinions. But let's go to a couple charts here on gold, and then we'll go talk about the dollar after that. So here's a 10-year gold chart. 10 years ago. Oh, how great it would have been in March of 2005, right? To just be gobbling gold up at $400 an ounce. Heck, we could go back further to 1999. Brown's down when Gordon Brown dumped the UK gold and picked some up for the $250 to $260 range per ounce, which I do have memories of those days and buying gold at that time, even though I was much younger. But you can see that steady climb right there. And I believe you can go online. I've done it on this channel before. And if you throw up charts of the dollar back then, you can see dollar weaknesses, other things that were taking place in the economy, which were helping drive the gold price up on that trajectory. Of course, look now at around 2008. Remember when Bear Stearns right around 07, 08 when Bear Stearns was collapsing, and then Lehman Brothers, and then the whole financial crisis kind of just exploded. There was some dumping of gold, that's that little downward scale there, to kind of shore up a lot of these funds and hemorrhaging institutions. But then amidst all that economic chaos, the bailouts, the money printing, and the massive amount of stimulus that was being pumped into the markets. Look at gold from about the mid-2008 to mid-2011. Look at that. Steady climb. It punched through the $1,800 mark. Kind of plateaued a little bit, had a couple of dips there. Almost touched 1,800 again in about mid-2012. And then from that point, we can see it start to take some drops. A lot of people are going to talk about recovery, this and that, but there was some manipulation, some currency strength going on. A lot of other factors taking place globally. Not to mention possible manipulations to make the dollar and the economy look better than it actually was. Conspiracy theories, you may ask? Who knows? There are crazier ideas out there. But that's the 10-year chart. Now let's look at a 1 year. Look at in the past year, we start out at like 1350 in March of last year, and now we're at about 1150. So it's shed some more. Nice little dips there. I look at this, I look at both of these charts now. And I look at the 5 year, let's go to that one. You look at the past 5 years, because some of you guys are brand new. So look at this 5 year chart. We're going to go to there again. Up, plateau, down. Again, we kind of looked at that on the broader picture back at the 10-year chart, but let's look at this 5 year for a second and talk. A lot of you guys may have gotten into gold and silver in this past 5 years. Now again, this is a gold chart, obviously. So we'll talk about gold. But if you got into gold within the last 5 years, let's say you did a majority of your buying back in 2011, 12, and 13, and then you kind of slowed down or maybe even buying a little bit. Right now is an ideal time to kind of balance out your average price purchased per ounce. A friend of mine does that. So he'll add up all of his ounces that he's purchased, or quarters and tenths, his total weight in gold. And he's very meticulous about entering into his little ledger how much he purchased each amount for. Date, time. So he has a good idea of the total amount invested in that particular coin or bar. If you average them out across, well, this is a great way to, it's a neat way to umbrella the costs for all your gold and to look at it from this angle. So hopefully I can explain it clearly and you guys can grasp it over YouTube here. Let's say you've bought 5 ounces of gold, and you bought an ounce in 2010, an ounce in 2011, an ounce in 12, an ounce in 13, and then maybe an ounce in 2014. If you add up the total amount you have in all of those, and then find the average price that you have for all of them, that's your average price. Make that the price that you've in your head psychologically that you've invested into each ounce of gold. So that way you can spread the savings on the ones you purchased low and the costs of the ones you purchased a little bit higher across all of them evenly to give you an idea of what your overall average purchase price for each ounce has been over that period of time. So right now is a good opportunity, if you buy gold right now, to lower your average price that you have invested in all of your gold. If you bought 10 ounces this week, you would be buying it in at the below 1150 range, which would dramatically lower, depending on how much you have, your total price invested in each ounce of gold. I think we've beat that into the ground enough. Averaging your price, and hopefully you guys can understand that a little bit and take an opportunity. I don't want to tell you what to do, and I don't want to drive anyone in a direction that they are not comfortable in going. But if you're out there and you have some trepidation on whether or not right now is a good time to buy, and you're here asking my personal opinion, and you had some cash laying around and you really had nowhere else to put it or anything else you really wanted to do with it, yes, I think right now would be a good opportunity to get some good foothold in metals for a price that is much lower than it has been. And honestly, my opinion is that I don't see gold going much lower than this. We've talked about, okay, where's the bottom? We've asked that question before. And I always get back to the large central bank purchases that took place over the course of the last 5 and 10 years, when central banks became historically net buyers of gold, net purchasers, when prior to that they had been net sellers of gold. And I always get back to the one big purchase I like to remember, where India purchased around 220 tons of the yellow metal at about $11.40 an ounce. So that's where I kind of see this bottoming out at and hanging out at. I think a lot of the central banks that locked in that 1100 range, 1140 range, helped to secure gold at that point. I do have other videos if you guys want to go back in the archives and dig through and watch other videos on this channel. You'll see explanations of those historical purchases, but also the cost of mining the yellow metal. Eventually, if the price of gold drops to a certain level, you'll see mines just get boarded up. They'll get shuttered because the cost of extracting it would far exceed the price they can even sell it for. Very labor intensive, and it costs a lot of fuel. But again, like I said, there's videos on this channel that explain that at more length. So what's been going on? Well, you know, gold's been dropping. We've been seeing it. You guys have seen it. We're talking about it right now, obviously. Well, look at this chart. That's the dollar. Over the course of a year, that's the time span from March of last year to March of now. What's it doing? It's going up, right? It's the leper with the most fingers left, as we like to say. All the other currencies are being destroyed, and just they're in a race to drop them. And it's this whole deflationary attempt globally. They're all competing to drop their currencies, prices, values, and a lot of investors, the dollar is gaining strength because either A, investors are going into it, or the other currencies are dropping so hard that it's just basically, maybe it's even just holding its own, but it looks like it's going up like this because the other currencies are dropping in their value so much, so fast. But as you can see, the dollar has, you could say, risen in its value. Here's one over the last 3 months going up, and you can, now if you overlay these charts with some of the gold charts, it makes quite a bit of sense as to, you know, the price of gold dropping. Now, we've talked about that in the past, how it's been surprising that gold hasn't dropped even harder with the strength of the dollar being what it has been, and surprising in a way that I think gold's actually maintained fairly strong in relation to how strong the dollar has become. Is the dollar in a bubble? Some people say that it is, some people believe that it is, but as you can see, oil has taken a beating from it. Stocks have reacted in ways that are, of course, as usual, as far as I'm concerned, unpredictable. You've had major rises in them and then drops, and then you'll see that, like the other day, the Dow rallied because the dollar took a dip. So when the dollar got weak, everyone got excited, or for whatever reason, and it drove asset prices up. What's next for gold? This is surprising. CNN Money had a thing here, and they quoted some individuals, different opinions, but this one here is from a well-known investing guru, Jeffrey Gundlach. And anyways, he's saying that it could rebound to $1,400 an ounce. And his reasoning: negative bond yields in Europe will make gold look more attractive. And he says that gold is an asset that outperforms in times of both inflation and deflation. In other words, when the market is scared of something, people flock to gold. Are there reasons to be scared right now? That's up to you. That's your interpretation of the news and what you might perceive or observe out there. Let's look at a couple other facts that are current and recent as they relate to gold. I think this is a good one. We talked about Venezuela the other day and how they are They were newly declared threats to U.S. security by President Obama. So Venezuela is discussing gold swap with Wall Street banks. So apparently Wall Street banks have their eyes on Venezuela's gold. Now, why would you want a yellow metal that's A, falling in value, B, worthless, C, an archaic, barbarous relic, and D, heavy, cumbersome, hard to move around and carry, and you can't eat it or live in it? It's overall just useless, right? So why would these major financial institutions be eyeing some South American dictatorship's yellow metal stash? Well, under the swap, there's a whole article on this you can look up, but here's a little snippet that I found interesting. Under the swap, the central bank would provide 1.4 million troy ounces, this is the Central Bank of Venezuela, mind you, in exchange for cash. So they're going to give 1.4 million metal troy ounces for some paper, said a central bank source. After 4 years, it would have the right of first refusal to buy the gold back. So they're basically pawning it. They're taking it to the Wall Street pawn shops, I guess. Added the source, who asked not to be identified. The ongoing talks involve at least two institutions, Bank of America and Credit Suisse. Two banking institutions that always seem to be at the center of a lot of these events and situations. Okay. Are they being mugged? Was that part of what we saw last week when they were declared threats? There's some probably unanswered questions here, things that you and I will probably never know as they relate to the Venezuelan situation and why they're being mugged for their gold, similar to other nations who have in the past been mugged by the West for their gold. Happens. It's happened historically, especially over the last several decades, multiple times. So again, always keep that in mind, how much attention is paid to gold and the things that take place surrounding it, when at the same time, and on the other hand, you're being told that it's worthless, it's a deteriorating investment, it's a bad place to put your money. However, these big institutions like Credit Suisse and Bank of America are the first to jump on a good deal and purchase some from a fledgling third world dictatorship. Alright, Irish finance minister dumps stocks to buy gold. The Minister for Finance in Ireland, Michael Noonan, sold his shares and funds that track European U.S. stocks and diversified his portfolio into gold. Now, being that yesterday was St. Patrick's Day, maybe he did it out of some celebration to celebrate leprechauns and the luck of the Irish and rainbows and pots of gold. However, I think Mr. Noonan has other reasons, being so close to the Eurozone and seeing what's going on in Europe. He may be making a very smart decision on his part to protect himself and his assets from what's going on globally. Just a little Exhibit A evidence there for you. You can do what you want with that little piece of information. Interpret it how you will. So, we'll close with Canada. We've talked about this off and on, maybe one or two videos a year. We'll bring up our little friendly neighbors to the north, the loonies and the toonies. But 78 cents, that was the Canadian dollar as it relates to the US dollar just recently. So it's taken quite a beating when it used to be almost at par, and at times even a hair stronger than the US dollar. But we've talked about the housing markets in Canada being a little inflated, possibly in a bubble situation like the US. But as you can see, there are headlines out there discussing the $1 million homes in Canada, the threat to the Canadian market, possibly a property bubble. There's also talk of the currency deteriorating in Canada, the weakening of their currency, what that means for them. As you know, there's a lot of oil in Canada, a lot of oil markets, and hopefully they pull out of this. I've always had a lot of faith in the Canadian economy because of their ties to commodities, mining, oil. I think they kind of look at things a little bit differently. I think they look at they place more value in things that are real, such as that. You don't see a lot of, as far as my opinion is concerned, what I observe, you don't see a lot of Canadian companies surrounding and trying to pump money into empty things like Facebook or Twitter, things that really don't produce anything, or, as far as I'm concerned, are not as valuable as we are told. But good luck, Canada. Hope you guys can pull it off. Keep stacking your metals. I don't know. We're going to wrap this video up pretty quick here. End it on the note that, well, we've looked at gold. You guys know where it's been historically. We've looked at some 10-year charts, some 5-year charts. We looked at a 1-year chart. You've seen where the dollar's been, where it could go. And I'll close with, is this a good time to buy gold in your mind? With the dollar being at basically 10-year highs, and gold being at, almost 5-year lows. I believe it is. So that's my opinion. I think we're in a good buying window. They always say, sell in May and go away. That's always been a little quote there in an adage, but things have not always been as they seem and appeared lately, and we are in that sea change, as we've talked about. And remember what we talked about also in a couple videos ago, the time of the vulture. So keep that in mind as well when making your decisions. Again, I am no financial advisor. I am not an expert. I'm just a humble individual that likes to look at the news, make some videos, and carry on conversations regarding all these topics with you guys out there, friends and of the channel. So let me know what you think, what your thoughts are, what you're perceiving and observing out there, and share your comments down below. Don't forget to like and subscribe and share. And also, I forgot, I never announced it on the channel, but you can find me now on Instagram. Occasionally I'll throw a picture up with a comment about something. So Junius Maltby, it's Junius_Maltby on the old IG. Alright, take care, have a great day.